Good morning. Happy Saturday. We're back with another Heyward CPA Live. Yes, I am solo today again. Beautiful things. Hope everyone is enjoying their Saturday. Wherever you're at in the world, whether it's sunny, rainy, hopefully you're enjoying the day. So I want to talk to you guys today. I'm going to do something a little bit differently, right? I'm going to share with you some information. We got a lot of questions. We get a lot of questions. Obviously, we deal with taxes throughout the year for our individuals as well as small business owners. So I want to be able to just kind of share with you. I'm going to share a PDF with you on some on the house of taxes, right? So things that we look at, give you kind of a real high level insight as to how we look at taxes or how CPAs and accountants look at tax information, how it's processed to give a better understanding, for the customer to understand, what goes into some of the things. So again, this is real high level. What are some of the things that goes into analyzing taxes? This also couples planning as well. So when people talk about tax planning and saving money and so on and so forth, how does that even work? Excuse me, I'm just trying to get my mic situated. I'm not sure if anybody's hearing any background noise or anything, but if you are, just let me know in the comments. But anyway, so tax planning, some of the insights, some of the questions, possibly, some scenarios and things of that nature. There'll be some analogies, right? There'll be some acronyms, pen and paper, write it down, Google the acronyms, educate and kind of learn some things. But always remember, we're here at Heyward CPA to give you a consultation and answer any questions. So again, feel free to put some questions in the box, as well as go to our help at heywardcpa.com and provide some questions. We always look for questions so we can come on here and answer it. All right. By the way, James did want me to tell everyone hello. He's good. We're splitting up responsibilities here for the next couple of weeks here. So he's in one place, I'm in another place, and just know that we're getting it done, and we are moving into quarter 4 with some planning and some implementation and some execution, which will spill in over to 2025 for our people. Okay. So bear with me, folks. Let me get this together here. My screen seems to be stuck. Okay, here we go. So, analysis of tax return for financial planning opportunities. And when I tell you this is going to be very, very, very fundamental, again, this is real high level. There'll be some detailed information in here, but I'm going to keep it very simple, real high level, and hopefully this will invoke some questions for everyone to reach out to us for. Again, invoke some questions, possibly spark a thought in your current situation, and and see how we can be of assistance, or even your current CPA or accounting firm can be of further assistance to you. So keep in mind, from a non-accounting perspective, there's a lot that goes into tax returns, even simple return is a simple return, right? And there's different levels of obviously taxes, right? But keep in mind that there's still time that's put in, analysis that is put in order to get the best outcome for clients, right? So it's important that, when you're planning or you receive suggestions from your financial advisor, that, you have an open mind, and as well as, do some implementation. I think that's really, really a point where we don't, we fall short most times is implementation. Sometimes it's just out of sheer ignorance, meaning not knowing. It's out of comparing, your situation to other situations, and it's not necessarily the same. It may seem the same, but it's not. And fear as well, right? Maybe you owe money. Maybe you're in a higher tax bracket and you have to pay more money, right? And that's fearful because you may not have it to cut a big check at the moment. So the question becomes, how do I better utilize my resources? How do I better utilize the information that is provided to me from a tax professional to propel me forward, and that way I can maintain and stay consistent. Okay. So here's the contents of what this information breeds. And these are things that we have to consistently, I say we, I mean CPAs, accountants, consistently have to go through. It's a process. It's a certification. These things are compliance. All of the above. This is not pick up, do taxes one time of the year or two times of the year, just inputting information. Any tax professional, if you really, really ask important questions and questions that can align properly, you'll find they may not give you how it's made, how the sausage is made per se, but these are some high level, some of the things that is attributed to preparing and planning. Okay. So demographics, dependence, and filing status. Again, high level. We're all familiar with that. Where do you live? How many kids do you have? Or right? Kids, dogs, cats, birds, snakes. Little joke there. And filing status, right? Single, married, so on and so forth. And here are some of the questions that come up under that category, right? What is the client's filing status? Does the client have dependents? Does the client have basic estate planning documents prepared? That's a big to-do, right? Has the client considered gift and estate planning opportunities for his or her dependents, right? Does the occupation indicate special coverage needs, such as adequate disability insurance for a surgeon? And then recommend a global beneficiary designation check, right? So on the content page, I'm not going to go through all of these. I just wanted to share with you what is within this PDF of information that I'll be sharing here today. And we'll go through a little bit more of an expansion under each section here, right? So again, if there's any particular questions, please feel free to drop them in the box, okay? Or write them down and send it to us afterward, okay? Now, first section, demographics, dependence, and filing status, right? So we talked about what's the client's filing status. So when you're in planning phase, right? Planning and preparing. They kind of, work together, and they can work independently as well. But consider running married filing jointly versus married filing separately analysis for a possible lower tax result. So that's a common knowledge point for most people, right? But the question is, are you actually doing it? Or are you waiting till the last minute? Or actually, are you planning to shift from filing separately or jointly, or vice versa, right? So again, having a plan, having what your goals are is very important for any financial professional to help you achieve what you're trying to achieve, right? Because tax planning, tax management of taxes is not really a one-off thing. It is very consistent. It is very consistent, and things change, right? Um, things definitely change. So consider that. Is the client divorced? If so, consider filing status and dependency exemptions. Does the client have dependents? Review dependency rules if parents are being claimed to confirm eligibility. These sections I'm reading off are things that most people have a good idea about, right? It's kind of the start of it all, okay? Um, Review dependency rules to consider if any child is eligible to claim themselves, right? Consider income shifting to take advantage of the children's lower tax rates. Consider kiddie tax implications. Review current and future cash flow analysis with respect to expenses of children and elderly parents. Consider full analysis to include retirement and estate planning. Retirement and estate planning. How many of us have a retirement and estate planning plan? I'll wait. Right? So, again, part of the tax planning analysis and implementation for which you like your future to look like financially, right? Discuss the future financial commitment of this care with the client. Do the number and ages of dependents indicate that income continuation needs are likely to be high? Discuss advanced child tax credit payments and the pros and the cons of opting out. So again, most people are familiar with the child tax credits, right? Because you get quite a few bucks back for when you're claiming your children, right? So, does the client have the basic estate planning documents prepared? Inquire with the client to determine if they have a will, durable power of attorney, advanced medical directive, living will, relevant trust, etc. This is a big doozy here. Right? This is important. This is extremely overlooked. Some people prepare, most people don't. Durable power of attorney. So I want you guys to write that down. Durable power of attorney. So Google durable power of attorney. Understand what that means. Okay. If you don't have any estate planning documents in place, again, there's nothing wrong with asking the questions. Have a consultation. Figure out what is estate planning. What does that actually look like? How much is that going to cost you? What all goes into estate planning? Very important, right? Do you have a will? Does your parents have a will? So on and so forth. Life insurance, right? So we'll touch on that shortly. But that's a very important part of this whole tax planning piece. It doesn't matter how much money you're making. A plan is a plan, because all it takes is one opportunity for your income or revenue to jump up, which will put you in the big leagues. Okay. If the client has estate planning documents, when was the last time they were reviewed or updated by counsel? Has the client considered gift and estate planning opportunities for his and her dependents? So, for folks that have parents living still, does your parents' estate intact? Do they have wills and trusts intact? Right? Now, for us that have parents living and we have children, most times we're focused on our family and our children. As our parents get older, we start to focus on them and we lose sight of what we should be doing for our kids because we think we have time. This is real. It's not an opinion, it's an experience, but this is real. These are conversations, these are questions, real scenarios, and real situations that people go through. And I think we look past that and we take for granted that there are financial professionals that can help. So again, hence, if you're just joining us at any moment now, we're talking about tax analysis and planning, right? Why it's important, but just giving you a real high level of what accountants and CPAs have to think about for any financial professional, what they have to think about, what they have to do, certifications, studying, compliance, etc. Right? These are the things that have to be done in order to provide the proper services and advisories to clients. Because we do want to see clients win. So very important. Okay. We were talking about the gift and estate planning opportunities. So discuss annual exclusion gifting, right? Use it or lose it. Have gift tax returns been filed? What is a gift tax return? Write it down. Discuss the potential for education planning, including Section 529 plans. How many of us know about 529? A lot of people. How many of us use 529s? Not a lot of people. Note that under the TCGA, educational distributions are allowed for secondary school tuition, gift exclusions, or both for payments made directly to an institution for tuition. Blah, that was a mouthful, right? Again, this is why there are financial professionals that provide these advisories and these planning for people. Okay. Discuss the potential for medical expense planning. Please excuse me. You hear I'm probably sure you hear my dog barking in the background. She wants to go back outside, so I'll take her back outside after we finish our session here today. Okay, because it's beautiful outside. So, discuss the potential for medical expense planning, including gift exclusion for payments made directly to a medical service provider. All right, I'm going to touch on that. Discuss the potential for medical expense planning. For people that have jobs, may have benefits, right? Medical benefits, regular primary dental, vision, right? Possibly a small amount of life insurance. How does that impact you? Do you even know how it impacts you? Very important question, right? And how does that impact your future? And what offsets do you need to have in place to offset any possible medical expenses? So, preventative health is a big deal, right? So before we get to wanting to spend a lot of, or having, not wanting, but having to spend a lot of money on medical expenses, preventative medical is always a key. So reach out to your physicians and doctors, your trainers, your nutritionists, and get a preventative maintenance plan ahead of time. Discuss the overall estate planning with the client, including the desire for trust for future generations. Trust. What is a trust? Man. Consider cash flow analysis to determine the amount the client may be comfortable giving away at any point. It says today, but at any point, right? Taxes are important, but it's not the end all be all. Let me say that again. Taxes are important. It's something that must be done, but it's not the end all be all. You don't wake up every day saying, I'm going to work for tax money. No. What happens is because you have to pay tax. We all have to pay taxes. We do. It comes back to us in one form or another, right? So if we own a business, a nonprofit, we want to get some grants, we get some money back from that. If we win the grant or there's enough money to go around. So again, it's important. It's not the end all be all, but it's important. So having a basic understanding and having a relationship with a financial professional, and you allow them to guide you. You still have to be committed to the process. You have to be committed to the implementation, because the responsibility is on the individuals, the families, the business owners. It's not on the financial professional, the CPA, or the accountant. It is on the client to take the accountability of understanding what needs to happen, what action needs to be taken, right? So, very important. Okay. Consider the impact of the higher estate tax exemption under TCJA, and the sunset of the higher exemption in 2025, or the potential changes to the TCJA rules under the Biden administration, which are likely to happen before 2025. Again, another thing, a mouthful. And I told you I'm gonna be using some abbreviations here, so go ahead and Google. I can't answer everything for you, right? And I would like to see some questions come back on some of these acronyms as well, right? So this one's a mouthful. We'll flow away from that right now until we get some further updates down the road. Does the occupation indicate special coverage needs, such as adequate disability insurance for a surgeon? Very important. A lot of people in the hospital, right? So I think, a lot of times we may not feel that some things are relevant to us because we haven't experienced it yet, or we see it in the news or in passing, or we hear about it from other family and other friends and think that it doesn't, we're 6 degrees removed from it. But in all actuality, we all are going to be faced with it at one point in time. So why not? It's never, if up until this point, if you didn't have any plans, if you don't have a planning, you don't have an advisor, you don't have anything, it's never too late to jump on the bandwagon, as they say, right? Because these things are important. Okay. Review life insurance policies, qualified plans, employer plans and IRAs, bank accounts and other payable on death or transfer on death accounts, right? If the client is divorced, make sure the ex-spouse is not still listed as a beneficiary, right? These simple checks and balances, these simple applications, these simple things that will help in case, right? So something to consider. W-2 income, next section. Are there any income deferred opportunities available through the employer? Discuss the benefits of saving through a qualified plan. Review employer match to ensure the client is maximizing that contribution amount. And then consider Roth versus non-Roth contributions based on income wage level. I'm going to say it again. This is high level stuff that I'm sharing with you because we've had some people ask some questions. And again, this is what we do every year, all year. No time off from it. So it's very important. Now, some people are definitely, some people pay attention to the employer match for, 401ks and contributions and things like that, right? Not everyone does. And then you have high, you have mid, and you have low risk investments based off of those accounts. So are you familiar with what's happening in those accounts? Do you understand how you make money on the money that's getting contributed? And do you understand, if your employer is matching you, how much are they matching you? What is the time frame of when they match you at 100%, so on and so forth, right? The Fed recently just dropped the rate half a percent. What does that do for your portfolio, right? What does that do for your money? Tell me, these things are important. They are important. It's important you got to know it. You got to have an understanding. And if you don't, this is no criticism. It's just we have to just take the time to understand it, and don't let fear get in the way of learning and understanding what you need to understand. Fear is definitely a factor, but it's just not a real thing. It's something that we make up, or it happens to us if we decide that we want to neglect whatever we're supposed to deal with, right? So again, I just implore everyone to get with their financial professional, CPA, accountant, and start having these conversations. This is the purpose of this, uh, you know, information. Some it'll enlighten most, and some people may not. They may not care for it. Okay, great. Our motto's here: if we can affect one person, we're doing what we're supposed to do here, right? So I'll continue on. Discuss the benefits of the 83B elections. Google that. Discuss the benefits of exercising stock options in one year or another. Prepare income tax projections. Again, what does that look like? Right? Write down your questions. What is an income tax projection? What goes into it? How does it work? Remember from the beginning, what does it look like? Married filing separately, married filing joint, claiming dependents, so on and so forth, right? Just giving you some tidbits to write down in your question pad there. Review insurance premiums reported on the W-2. Discuss health insurance coverage and the possibility of using a high deductible plan coupled with the HSA. What does that mean? Got a question? Write it down. Discuss life insurance and review group plan coverage. If provided, review general life insurance planning needs analysis. Review disability insurance coverage provided by the employer. And based on age, discuss need for long-term care insurance. Check and verify wage history with Social Security. And based on age, discuss Social Security benefits, planning, including full retirement age discussion, when to take, decision to work longer, etc. Factor in survivor benefits. Kory, what are you talking about here today? Why this today? I'm telling you. 2024 is a different kind of year. Maybe not for everyone, but it's a different kind of year. So again, you don't have to know everything. You don't have to be an expert. Be familiar with things. It's important. It's important. It's important because, as they say, choose your heart. It's hard being rich. It's hard being poor. Choose your heart. It's hard being happy. It's hard being sad. Choose your heart. Right? It's hard being healthy. It's hard being unhealthy. Choose your heart. Right? All right. Additional income and adjustments. Does the client have any retirement plan distributions? Right? Were any required minimum distributions taken? If no, RMD was taken due to whatever year RMD waiver, confirm they are prepared to resume in that current tax year, right? Discuss RMD requirements if they are of an age 72 under the Secure Act that requires a first-time RMD in the current year. Confirm if they are a non-spouse beneficiary and aware of the time period within which the inherited IRA account must be liquidated. Again, Kory, what are you talking about here today? All right. Discuss with the client his or her beneficiary designations to ensure they agree with the client's wishes, right? Consider which retirement accounts the client should be taking distributions from to ensure the highest tax efficiency. So again, I'm going to come back to my disclaimer. A lot of this information is high level, but I'm sharing with you some insightful information. Tax preparation is involved in this information. Tax planning is involved in this information. They're two different, but one and the same. Okay. Something to think about. Okay. Discuss Roth IRA conversions depending on time horizon. Hold on, this is a lot right here. It may make sense for the client. Keep in mind AGI thresholds. However, that could be surpassed with income from a conversion in 1 year. Run projections on a multi-year basis as well as present cash flow analysis on converted amounts. Be sure the client is aware of the elimination of the Roth recharacterization option. What are you talking about, Kory? This is why CPAs and accountants are important. This is why they're important. They decide to go through this stuff. They put it on, all as they say, they risk it all to study this stuff, to stay certified. Barring the harassment, they still wake up every day. Some nights don't even go to sleep near deadlines to make sure clients have the proper prepared return and or plan throughout the year. Quarter one, quarter two, quarter three, quarter four, annual. Quarter one, quarter two, quarter three, quarter four, annual. 5 years, 10 years, 20 years, 30 years. How many of us have, our parents, and we looked up and they went from one age bracket to another age bracket like that. They went from 1 year old to 5 to 15, 15 to 25 and 30. Well, elementary school to high school, from high school to college, now they graduate. So time flies, right? And if you're working on your plan as you go, just a little bit at a time, one thing at a time, inch by inch, everything is a cinch, right? So if you're working on a little bit by time passes, you can kind of be somewhere. But again, this is just, familiarizing you with some high level insight. Okay. Does the client have income from a retirement plan held with former employers? Right. Discuss rollover of funds to an IRA and or consolidating IRA. If the client has multiple IRAs, be mindful of the IRS rules allowing just one rollover from an IRA per year. How many of us have IRAs? How many of us are utilizing our IRAs? How many of us understand how much we can contribute to an IRA per year? Does the client have Social Security income? Consider whether any of the Social Security income maximizing strategies might apply. Did the client retire early? If income will be lower, should you consider Roth conversions? Right? So, we're at 11:38. We still have a ways to go here, right? I'll see how far we get at the hour. But again, just for those that are dropping in to check us out, want to just give you a high level of some tax prep, some tax planning analysis that accountants and CPAs engage themselves in with their clients, right? So for those that, don't really understand, here's some of the information, right? Questions, scenarios, statements, options, things to consider. There's a lot here. Schedule B. What's the Schedule B? I'm not going to tell you. Google it. What are the sources of the client's interest income? That might be a hint right there. If taxable, does it come from bonds, CDs, savings accounts, etc.? If tax exempt, understand the state tax impact. If the source is savings accounts, consider the FDIC limits. If the source is municipal bonds, consider the safety of the bond. Does the client have any foreign bank accounts? Consider the boxes on Schedule B related to foreign accounts and consider whether report of foreign bank and financial accounts, FBAR, or Form 8938 need to be completed. What? Kory, what? Just sharing. What are the sources of the client's dividend income? Understand the types of stocks or dividends generating the dividend income. Is it mostly from mutual funds or stocks? Are there tax-efficient alternatives to the investments you see here? Is the client reinvesting dividends and capital gain distributions? I hear capital gain distributions A lot. A lot. And most people get it wrong. Most people get it wrong. Unless you go to a financial professional. We're not talking about you doing it on your own. We're talking about planning, right? Okay. If they are in accumulation mode, discuss turning on reinvestment of income in their accounts. If they are in decumulation mode, discuss turning off reinvestment of income in their accounts to supplement cash flow needs. What does that mean? Go to heywardcpa.com, schedule a consultation. We'll get you there. Or reach out to your CPA accountant and ask these questions. Don't expect the CPA accountant to give you information. Don't expect them to give you information unless it's information that is directly correlated with whatever service they are providing. Sounds a little crazy that I just said that, right? No. Don't expect anybody to give you any information that they may not even know or understand or have a clue to. So if you're doing something simple, this is the service and this is the information we need. If no one knows in 5 years, you plan on selling your house. How could they give you that information if they don't know? So raise your hand, ask your financial professionals all kinds of questions. There's no stupid question. Well, sometimes there is, but you get what I'm saying, right? Ask the questions. Just ask questions. Be aware. It's important. It might take some time for things to implement and happen, but ask the questions. That's all. Okay. Consider other planning opportunities. How are assets custodied? What? How are assets titled? Does titling line up with the client's desires? Right? Explain to the client various ownership options and the impact of each. Review titling for non-probate transfers, accounts with survivorship, or TOD, POD options, titling for asset protection, example, tenants by entirety, and titling for maximizing Section 1014B6 community property. Again, Kory, what are you talking about? Are you kidding me with this information? It's information. It's information. Does the client have an investment policy statement? If so, when is the last time it was reviewed and updated? An investment policy statement. Wow. It's pretty deep. Overall, does the client have an investment strategy in place that guides decisions related to all investments held? If not, assist with that if desired. Relatedly, ensure that the client's risk tolerance is measured and documented. This paragraph right here, this covers the beginning and the end. This little piece, because this goes back to being aware. This goes back to having some goals. This goes back to implementation. This goes back to answering questions. This goes back to not being reactive but being proactive. This paragraph right here. Do you have an investment policy statement? I'm going to start asking people that from now on. Now, I'm going to ask, do you have an investment policy statement? And they're going to say, Kory, what is that? And I'm going to have to explain. But I'm going to start asking that question because now I'm going to do some surveys. Do you have an investment strategy in place that guides decisions related to all investments held? Isn't that planning? Didn't that sound like planning? Short-term and long-term planning? All right, I yield back on that. All right, does the investment income indicate a concentration of certain investments? Discuss diversification strategies to mitigate market risk with the client. Has the dividend or interest income dramatically increased or decreased since last year? If so, why? Does this represent a significant change to a client's income versus growth strategy, and should asset allocation be revisited? Come on, Cole. Consider the amount of interest income compared to dividend income and how this represents the underlying portfolio. Consider the tax efficiency of the investments and review asset location. Given the net investment income surtax, should the client move investments that create taxable income into tax-deferred accounts and vice versa, while still maintaining an appropriate allocation? Review investments funds for fee structure. For investments in taxable accounts, are tax-managed funds investments available? Has the client established an account for emergency funds? If so, where and how much? Assist client in revisiting liquidity needs, including reviewing cash flow analysis. Given the higher rates available in some online banks, consider using a high-yield savings bank to hold the cash reserve. And then explain tax-preferred treatment of right dividends. Man, I just gave a mouthful, right? Just that page 5. That's a very important page. Page 5. I'm going to make note there. Page 5. Okay. I'm going to spin through these. Self-employment income. Those are Schedule C's, right? Determine what type of activity the business is and discuss hobby, investment, activity, trade, or business rules, including loss deductibility or limitation based on character. Determine whether the business generates qualified business income, QBI, as defined under IRC Section 199A, to be able to potentially take advantage of the 20% pass-through business deduction. Consider the current income phase-out limitations. Are there changes in the business structure that could allow the client to receive a larger deduction? Now, I'm going to stop right here. For all our business owners, I'm going to ask you a very important question. Do you have an accounting software? No, let me ask you another question. How do you manage your books? Wait, hold on. How do you record transactions? Wait, do you have an accounting policy manual in place? Wait. When's the last time you ran a financial statement, looked at your income statement, balance sheet, and cash flow? Or got and went through an advisory and planning with your financial professional for your financial statement? Because this section here, we're talking about, self-employment income, Schedule C's, S corporations, how you managing your books? Because if not, then you're taking a reactive approach. I made this, I spent that. I don't remember what this receipt goes to, but can you tell me how to take advantage of of saving some money on paying taxes? Yeah. Should I continue? Okay. On self-employment income, I'm going to stop right here. I'm going to leave it right there. We had that second paragraph. That's another important piece. We're going to stop right there. Let me take a look real quick. Do I want to stop there? I'll drop down to the last one. Now, I'm going to read these. Review groupings of activities under Internal Revenue Code, Section 469, to determine if elections should be made that will benefit the client. Also see Schedule E. So we got schedules, we got forms. There's a whole lot going on there, right? Consider the use of retirement plans for self-employed individual. How many self-employed have retirement plans if that's your only income as a self-employed person? Schedule C. Determine the income shifting opportunities among family members via employment. What does that mean? Schedule a call. Discuss the range of options to structure the business for risk management and tax consequences. You know, what's funny is, I'll just share this real quick. Recent experience was the question that was given was, or the statement or the motive was, I need to save on taxes. And I'm going to save on taxes by purchasing X because I don't want to pay a lot in taxes. And I want to be able to pay for other services and other reports that's going to help me decide if I should actually, or how I'm going to reduce those taxes. And I want you to tell me how to do that. Oh, and wait. Then I'm going to turn it around and turn it into a viable business to make revenue. But I still don't want to pay a lot in taxes. That was kind of riddled out, right? Not a lot there. But if you pull out some of the bullet points, you understand where I'm going with this. It's important for planning. It's important for having, we're in the age of technology. There's no reason why. I mean, there's our reasons and excuses, but take advantage of your financial professional, your CPA accountant. Find out what they have to offer. Have a discussion, schedule a consultation, and really dig in. But write down what you want to see happen in 5 to 10 years, or 15 to 20 years, or whatever. If you're planning on growing your family, and or plan on getting married, or you're in business for yourself, or you have a partner, or you want to buy a business, or I don't know. Write those things down. Have a vision planning document for yourself, right? And then bring it to the table. It doesn't all have to be answered at one time, but start a flow. It's going to help. Is your client an S corporation shareholder with the ownership of more than 2% of the company's stock? Consider the corporation reimbursing shareholders Medicare premiums. Man, that's a mouthful right there. Schedule D. Does the client have capital gains and losses reported on Schedule D? I'm gonna jump over here, right? Schedule E. Is there income flowing through from an LLC, S corp, or partnership to a Schedule E? Now, consider whether the activities are passive or active for purposes of deducting losses. I'm not going to go into that. This is a section that most people actually screw up because they ask the wrong questions, and they come to the table with some of their own answers. But we're here to help you. Are there rental real estate properties being reported on Schedule E? And this is advising consider risk management with the client. How many people understand what risk management is, or being risk adverse? Like, risk is not a bad word. It's not a bad thing. It's only bad if you look at it as bad, or if you're doing something that's going to put you in a position to have a high level of risk. That's when it's bad. But if you could turn risk into profit, it's all in how you manage it. When you get in your car every day and put that thing in go, and you're driving down the street, you're risking your life for getting into an accident, or, whatever, right? But if you're paying attention, you know how to drive, you're not in a rush, you're being respectful on the road, you'll get where you got to get safely. Not saying you won't have an accident down the road, but, low level accident, low bumper action, right? And then there's the unfortunate actions where people lose their life, which is tragic, right? So, that's kind of like what life is. That's how it's dealt at times. But understanding risk management, how are you adversely able and adaptable to risk, right? So ask those questions. Is there income flowing through from a trust? Remember, that's that trust word again. Consider other planning opportunities. And here's everyone's favorite. Itemized deduction. Does the client have substantial charitable contributions? Substantial is the key word here. Does the client have a significant state tax deduction? Are there substantial medical expenses being deducted? Does the client have an interest expense that is being deducted? Right? Explain the benefits of the mortgage interest deduction. Now, some of these things apply, some don't apply. Some rules are adjusted, some rules are not. Ask questions. Okay? Is the client in AMT or have they been in the past? Whoa. AMT, Google it, but I'll tell you what it is. You ready? Alternative maximum tax. What does that mean? That means there's 2 tax returns that need to be prepared and ran by the professional to determine which is the maximum amount of tax that should be paid if the client falls into AMT. Again, CPAs, accountants, financial professionals wake up every day to help their clients. They go through understanding this, certifying every year over year, qualifying year over year, being compliance year over year to help. The real ones, the ones that actually love and appreciate and respect what they do and the clients that they serve. Okay. Credits. Consider education credit alternatives. Consider the available energy credits. If the client has a foreign tax credit that are carrying over, even if small, consider deductibility on Schedule A, blah, blah, blah. State tax. Review the client's state tax situation. And then other considerations. Always consider multi-year planning opportunities and potential future tax rate changes. Discuss future income and deduction items within the client's control. And then consider how recent or proposed legislation or regulatory action may impact strategies. Boom. This year's election. So, I mean, we're at 11:58. Don't want to go any longer with, reading off the screen. But it was just important. I felt, I had something else planned today, but we'll get into that in another 2 weeks. But I felt today, that I wanted to share with everyone, some of the high-level insight that financial professionals, CPAs, accountants go through. I have to think about. Now, these are thoughts. If you're a client, we don't have to talk to you specifically after we've had the initial conversations, but we're thinking about as we're doing and working and navigating and implementing. This clearly saying, hey, consider to ask your client this. Make sure you discuss this with the client. Make sure you think about that with the client, right? So all we ask is, you may not know it all, but come to the table with some questions. What are your goals? What are you trying to achieve? How much money do you need to live? That's a simple question. Very simple question. Most people go, I don't know. I mean, calculate everything. Take some time, write it down, get a calculator, start tapping away. Doesn't matter what the number is. We'll get to why that number is what it is, but figure out a number, right? That can be applied on an individual level. Most importantly, businesses, because we have a heartthrob over here for businesses, because we're a pro-business firm. We it's all about business for us, businesses, growth of businesses, the health of businesses, and the people that run them, and the ecosystem that we are a part of, to help business owners win. Can't help you with all the wins, right? But we can help you with a significant amount of wins. All you need to do is win one thing at a time. So I hope today was influential. Some may say inspirational, some may say not. That's still information. Means you thought about it. If you have any questions, drop us some questions down below. Go to heywardcpa.com, schedule a consultation. You can even hit us at help at heywardcpa.com with some questions. Go to all of our platforms: LinkedIn, Instagram, Facebook, um, Twitter, I believe, as well. And obviously on YouTube, you can rewatch this video, and so you can get your questions together for the next episode. But I'm glad that you were able to drop by today and hang out with me for a little bit. Everyone enjoy your weekend. Enjoy the rest of your Saturday. Stay blessed. Stay positive. Keep pushing forward. And we'll see you soon. Deuces up. Peace.